Good evening, everyone. This is Madhuri. A very warm welcome to all of you for this Nucleus Software earnings conference call for the quarter and year ended on March 31st, 2026. For discussions, we have here from the management team, Mr. Vishnu R. Dusar, our Managing Director, Mr. Parag Bise, CEO and Executive Director, Mr. Ashok Kumar Bura, Chief Financial, Mr. Mukesh Bangia, Vice President, Mr. Abhishek Pallav, Vice President, Ms. Swati Patwardhan, Chief Human Resource Officer, Mr. Pradeep Malik, Vice President, and Mr. Tapan Jaishwal, Financial Controller. As you all are aware, Nucleus Software does not provide any specific revenue earnings guidance. Anything which is said during this call which may reflect company's outlook for the future or which may be constructed as forward-looking statement must be reviewed in conjunction with the risk that company faces. An audio on the transcript of this call would be shortly available on the investors section of company's website, www.nucleussoftware.com. With this, we are now ready to begin with the opening comments on the performance of the company, and post that, we would be available for the question and answer session. With this, I now pass it over to Mr. Vishnu. Over to you, sir.
Good afternoon and a warm welcome to this investor conference call for the year ending 31st March 2026. This being our 30 years of our going public, we celebrated the occasion with bell ringing ceremony last month, and we would want to take this opportunity to thank all of you for your sustained support to this company with your voting in the form of your shares, and we want to reiterate our commitment to long-term growth of the company. With those words, I would like to hand over to Parag.
Thank you very much, Vishnu sir, for that. And good afternoon and welcome everyone to the Q4 and year-ending investor call. As Vishnu sir mentioned, indicated, we all know we are going through very uncertain time. However, we'd like to assure all of you that we are taking enough steps to make sure that we understand the situation very well and respond to it. So we're taking various initiatives that we will talk about as a part of the Q&A that happens later. Thank you very much.
Now I request Mr. Tapan to present the financial numbers. Over to you, Mr. Tapan.
Hello.
Yes.
Am I audible, Swati?
Yes. Please go ahead. Yes, please.
Our consolidated revenue for the quarter is at rupees 224.77 crore against rupees 220.03 crore quarter-on-quarter and rupees 228.96 crore year-on-year. For the year, it is rupees 876.03 crore against rupees 832.25 crore for the previous year. Overall revenue in foreign currency, including India rupees revenue, is $24.75 million for the quarter against $24.92 million quarter-on-quarter and $26.53 million year-on-year. For the year, it is $99.6 million against $98.5 million for the previous year. Product revenue for the quarter is at rupees 189.05 crore against rupees 185.58 crore quarter-on-quarter and rupees 199.56 crore year-on-year. For the year, it is rupees 740.56 crore against rupees 713.79 crore for the previous year. Revenue from projects and services for the quarter is at rupees 35.72 crore against rupees 34.45 crore quarter-on-quarter and rupees 29.4 crore year-on-year. For the year, it is rupees 135.47 crore against rupees 118.46 crore for the previous year. Moving on to expenses, cost of delivery including cost of product development for the quarter is 70.1% of revenue against 70.4% of revenue quarter-on-quarter and 57.3% of revenue year-on-year. In absolute terms, this is rupees 157.45 crore against rupees 155 crore quarter-on-quarter and rupees 131.29 crore year-on-year. For the year, it is rupees 622.85 crore against rupees 568.69 crore for the previous year. As for marketing and sales expenses for the quarter is 7.1% of revenue against 7.8% of revenue quarter-on-quarter and 4.9% year-on-year. In absolute terms, this is rupees 15.93 crore against rupees 17.2 crore quarter-on-quarter and rupees 11.24 crore year-on-year. For the year, it is at 61.93 crore against rupees 36.13 crore for the previous year. As for G&A expenses for the quarter is 7.5% of revenue against 6.9% of revenue quarter-on-quarter and 5.3% year-on-year. In absolute terms, this is rupees 16.77 crore against rupees 15.10 crore quarter-on-quarter and rupees 12.09 crore year-on-year. For the year, it is at rupees 67.09 crore against rupees 59.82 crore for the previous year. EBITDA for the quarter is at rupees 34.62 crore against rupees 32.72 crore quarter-on-quarter and rupees 74.33 crore year-on-year. For the year, EBITDA is at rupees 124.15 crore against rupees 167.6 crore in the previous year. Other income from investments and deposit is at rupees 11.27 crore against rupees 14.87 crore quarter-on-quarter and rupees 16.75 crore year-on-year. Total other income for the quarter is at rupees 14.92 crore against rupees 15.12 crore quarter-on-quarter and rupees 16.62 crore year-on-year. For the year, the other income from investments and deposit at rupees 56.49 crore against rupees 64.79 crore for the previous year. Total other income for the year is rupees 64.16 crore against rupees 66.26 crore for the previous year. Total taxes are at rupees 6.96 crores against rupees 3.96 crore quarter-on-quarter and rupees 22.77 crore year-on-year. For the year, taxes are rupees 33.14 crore against rupees 56.05 crore in the previous year. Net profit is at rupees 34.55 crore for the quarter against rupees 20.7 crore for the quarter and rupees 64.77 crore year-on-year. For the year, it is at rupees 116.74 crore against rupees 163 crores in the previous year. Other comprehensive income is at negative 1.58 crore for the quarter against rupees 3.58 crore quarter-on-quarter and negative 0.20 crore year-on-year. For the year, it is rupees 9.4 crore against negative 3.56 crore in the previous year. Total comprehensive income, which includes net profit and other comprehensive income, is at rupees 32.97 crore for the quarter against rupees 24.28 crore quarter-on-quarter and rupees 64.57 crore year-on-year. For the year, it is at rupees 126.14 crore against rupees 159.44 crore in the previous year. EPS for the quarter is at rupees 13.12 as against rupees 7.86 in the previous quarter and rupees 24.6 in year-on-year. For the year, it is at rupees 44.35 against rupees 61.40 in the previous year. In terms of foreign currency hedges, on 31st March, we had USD 2.5 million of forward contracts at an average rate of rupees 91.33. There is a mark-to-market loss of rupees 1.09 crore, which is taken to hedging reserve in the balance sheet. Revenue contribution from the top 5 clients of the quarter is 29.3% against 27% in the previous quarter. The order book position is rupees 1044.31 crore, including rupees 899.44 crores of product business and rupees 144.87 crores of project and services business. On 31st December, the order book position was rupees 656.68 crore, including rupees 588.74 crore of product business and rupees 67.94 crores of projects and services business. Total cash and cash equivalent as of 31st March are rupees 972.37 crore against rupees 971.6 crore as on December 31st. This includes balances in current accounts of rupees 80.01 crore, various schemes of mutual fund rupees 597.02 crore, fixed deposit of rupees 263.22 crore, investments in tax-free bonds of rupees 32.12 crore. With regards to receivable, we are at rupees 121.12 crores against rupees 137.41 crore the previous quarter. During the quarter, there is a gross addition of fixed assets of rupees 18.35 crores, consisting primarily of rupees 6.35 crore on computer and servers and rupees 11.78 crores on building and plant and machinery. Now I'll hand it over to Swati.
Thank you, sir. With this, we are now open for the question and answer session. Over to you, Madhuri.
Thank you, ma'am. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. The first question comes from Rushabh Shah from Bugler Rock. Please go ahead.
Am I audible?
Yes, sir.
Yes, yes.
Yeah. So my question was, we have lost one of the leading NBFCs as a customer to our competitor. Just wanted to know what could be the reason that a leading NBFC India has is no more our customer. Was it the pricing part or the software issues?
Which NBFC you are talking about? Can you please name that?
Bajaj Finance.
Sorry?
Bajaj.
Bajaj Finance. So Bajaj Finance is not because of any other reason, but it is more of a, I would say, they have on their own invested in a company which is a competitor to us. So that was a strategic reason with which this decision was taken.
Okay, so Bajaj Finance itself invested in a company where the company is a competitor, correct?
Yes.
Okay. Next question was, since the customers, we've had this problem that customers are not migrating from FinOne to FinOne Neo. So they are content in the software they are using because it fulfills the requirement. So what incentives do we provide them so that they shift to the newer platforms and pay higher? And if you could also give me some numbers on how many customers have shifted to the new platform.
So, very recently, one of the leading public bank in India, we witnessed a large transformation that has happened, and that was as smooth as a cakewalk. So, I am sure you must have got to know through the news. On the transformation project, now the good part is that we are using various tools and techs like AI to detect, map, and initiate the transformation journey. One of the challenge is that since some of these implementations are 2 decades and more than that older, so a lot of customization has gone by, and then one exercise that is being done. At the same time, we are also in talks with the customer to be ready to come up to the new platform. So all these discussions are happening, and our roadmap is being prepared. So it is very much in our focus and on our cards also. Does that answer your question?
Just a follow up on this one from like you said, the roadmap is ready and the implement takes a lot of time. So could you just
No. I did not mention that implementation takes lots of time. I'm saying that the erstwhile version, or which is called FiN1, is there in production for more than 2 decades or beyond, or even older. So in such cases, these implementations have taken their own path through different customizations at various times. We have created our in-house transformation toolkit, which is AI enabled, and we are baking AI to detect the changes and mapping to the product capability and features that FiN1 Neo offers. And so to ensure that the onboarding or transformation from old version to the new version is seamless, and that is the way forward. So that is strategy we are taking.
Okay. So my next question is that some years ago you had mentioned that Japan as a market is a tough market to crack because of the language or the acceptance of technology. So it's a good challenge for Nucleus to be able to crack Japan as a market. And
So as we know that Japan market runs on relationship, because it takes time for Japanese culture to take up and adopt new product lines. So we have been there in the market from past 25 years, and we have built a lot of credibility, and our customers actually have been there from past 25 years. So we have been making a conscious effort to tap some of the top Japanese banks, and there are some active discussions which are currently on, and we might see some results in upcoming quarter, because it takes time actually to get the required level of confidence on the new product. I hope that answers your query.
Yeah. Thank you so much, sir. So there's the last question on, like in the previous calls, you have mentioned that it was a mistake that we didn't focus much on the marketing of our product. Although we knew like Nucleus has one of the best products in the world. But when I see your sales and marketing expense, it is still around 1% of the revenue. So are we seriously looking at marketing our products? And since you have said that you are focusing on sales and marketing part, so how many new sales people have you hired in the last, let's say, 4 to 5 years?
So I think in last 2 years, our focus was to strengthen our sales and account management function. This has led to a growth of about a headcount of anywhere between 40 to 50 sales executives in the team. And this is across all sales domains. So hunting, which is for new sales, account management for existing customers, generating business through existing customers. We also have a team onboarded for partnerships and alliances. To lead this team, we have recently onboarded Dr. Apurv Chamaria, who has joined us as Chief Business Officer, and all these sales and partnership and account management functions roll up to him.
Okay. Thank you.
Thank you, sir. Participants are kindly requested to ask one question in the initial round and may join back the queue for more questions. The next question comes from Samar Singh from TPF Capital. Please go ahead.
Good afternoon. Thank you for the opportunity. Could you just tell me what was the total number of logos that we added this year? And if you could repeat the order book.
So we have added 7 new logos this year in financial year 25-26 versus 3 logos in 24-25. So trajectory is promising and moving in the right direction. If we talk about order book, we are sitting at the close of March 26 in the upwards of 1,000 crores as compared to last financial year of around 600 crores.
Did you say 1,000 crores?
Sorry?
Did you say 1,000 crores was the order?
1,000 crores. Yeah.
Okay, great. Okay, so we are actually finally seeing the benefit of the marketing spend that we've been spending over the last couple of years.
Absolutely.
Okay, great.
And so it is a combined effort of multiple things. So marketing expenses, our investment in improving our capacities, our investment in terms of upskilling our teams, our efforts in terms of spent in AI and everything. So collectively, it is finally showing the results.
Got you. So, you had mentioned in the earlier question that sort of Bajaj Finance invested and went with a competitor. I believe that competitor also has now got a product, at least a product line, I'm not sure how, from HDFC Bank as well, which is, I think, one of our oldest clients. So if you could talk about that, like, are we losing market share with HDFC? What's happening there?
So we can't really comment on our competitors and their ways of working and they approaching any client or not. We can't really comment on that.
No, but are we? What can you comment on our relationship with HDFC, given it's one of our oldest clients, and I would assume a large part of our, a decent amount of our revenue.
Yeah, the relationship is nearly 30 years now, and it continues to go strong.
Okay.
Thomas, sir, sorry. Can you please join back the queue for more questions, sir?
Sure.
The next question comes from Rahul Jain from Kamyakya Wealth Management. Please go ahead. Rahul, sir, please go ahead with your question, sir.
Is my line audible?
Yes, sir.
Yeah, hi. This is Rahul Jain from Daulat Capital. Maybe there was a correction in the name. Yeah, so my question was that, we have a very strong order signing that has happened during the quarter. So I would appreciate if management could share some color in terms of which market this came from, and some of the local offices that we have set up in different regions, have some of these efforts have fructified, causing this book to jump? And also, is this coming from SaaS side of revenue? Because we don't see much momentum happening in the Q4 revenue, or we expect this order book to actually fructify in the next couple of quarters, and it came much more closer to the end of the quarter. Thank you.
So, Rahul, most of our contracts are spread contracts across few years. And if we talk about, and that is why the revenue impact might not be seen in the first quarter or maybe 1 or 2 quarters, coming quarters. However, this robust order book is going to definitely positively impact in positive terms for quite few quarters. If we talk about areas from where or geographies from where we have got this order, happy to share that one of the order which we have booked is from US, and other orders, most of the orders are from India. There are few orders from other geographies as well, but majorly it is from India and US.
India and US. And you're saying, sorry, Ashok, I could not follow the part which you said it should flow out in the next few quarter, or because we got it toward the later part of the thing, or you're saying generally it takes time for us to recognize the revenues?
Yeah, so in general it takes time. So while we have received the order, there is an implementation cycle as well, which goes before we recognize the revenue. And that cycle depends on the complexity of the order which we have received and the size of the order which we have got, and integration with the customers. So that is why I was saying it might not be immediately reflective in revenue, maybe in immediate 1 or 2 quarters, but definitely once the implementation is done, we should see that revenue flowing in our books.
Sure. And if I could ask one more, in general, if you could talk about how the deal wins are trending. Are these more happening towards the subscription model, or the traditional long-term model is one thing? And one data point question is, if you could share what was the headcount at the end of the quarter. That's it from my side. Thank you.
So headcount at the end of the quarter was 2025.
24.
So 2000 is in the range of 2000, and which is pretty much same as maintained across last few quarters. If you see a plus minus of 100 counts which you can think of. And if we talk about this, the another question was with revenue, right?
Yeah, I was trying to understand, are deals coming on the SaaS model or mostly coming on the on-prem model?
So we are a product company, and our deals are with respect to product. Yes, a part of the revenue definitely is subscription-based fees as well. But however, it is a hybrid model on which we work, and most of the deals are long-term deals. So there is fair, I would say, reasonably assured revenue which is going to come for future.
Thank you, sir. The next question comes from Rishabh Shah from Bagler Rock. Please go ahead.
Yeah, I had just one question, sir. A couple of quarters we had talked about bringing in new features like the co-lending and the gold loan. So any update on that front?
Yeah, I think both co-lending and gold loan is going to be the focus area, and we have been trying to understand more on both these capabilities that we have built across. And even in this current GA which is getting released, both this line of businesses are being strengthened, be it co-lending, be it gold loan, and we have also strengthening the finance against security as going to be the potential line of business as we have understood the market. So these are going to be the key LOBs where we are going to invest.
Okay. So just a small question. So in general terms, when a customer is in a pipeline, how long does it take to convert the customer into sales? And what could be the possible reasons from the customer's end to the process get delayed?
So while there is no right or wrong answer to it, but it can typically take anywhere between 6 weeks to maybe I would say 3 months or 3 years also. There are customers we have been engaging for almost 2 years, and we have closed contract after 2 years of discussion.
Yeah.
So if we see it, if it is a greenfield kind of project, it might be done in 6 months. If it is a already established, I would say company or something of that sort which is doing a migration, it may take a lot of time.
Okay. Thank you so much.
So technically it depends upon from where the transformation is happening. If it is a different system altogether and the customers struggle, sometimes we also see that the team itself struggles to give us enough information about the implementation. So that discovering the unknown takes at times, but usually if it is a vanilla implementation, it is a matter of, for SaaS business, it is a matter of days. Otherwise, means as Ashok talked about, sometimes it takes 3 months also.
Thank you, sir. The next question comes from Samar Singh from TPF Capital. Please go ahead.
Yeah. Thanks for the opportunity again. So just wanted to follow up on the previous question that I had. So is it fair to say that none of our existing customers have shifted either away from us, either completely or any of their product lines over the last 3 years?
Sorry, I couldn't follow the question. Can you please repeat again? I'm so sorry.
Yeah, I just wanted to confirm, over the last 3 years, have any of our customers either shifted away from us completely or even any of their product lines away from us?
I don't know. None of the customer has walked away from us. That is what he's trying to achieve.
He is talking about 3 years.
Last 3 years he talked about.
Yeah. I think nothing significant.
Yeah.
If we talk about other than this Bajaj thing which we have talked about, there is nothing significant.
Bajaj was never with us, right? I'm sorry, I didn't get that.
Sorry?
I didn't get your previous answer.
No, so I am saying there is no significant loss or movement from any of our customers in terms of either module or moving out completely.
Okay, got you. And would you be able to share what our win rate is in these in RFPs over the last 3 years?
There is a detail we may not be able to provide.
Okay. And last question was, so in Japan, we mentioned we are making some inroads. Can you share what which software the Japanese banks currently use?
Most of their software is homegrown.
So it's in-house software?
Yeah.
Got you. Okay. Thank you so much.
Thank you.
Thank you, sir. The next question comes from Sanjot Kare from Vision Finance. Please go ahead.
Hi, good afternoon.
Good afternoon.
So my question is about last Q4, like Q4 of 2025. Company has grown up almost 10% in revenue, and compared to this quarter, Q4 26, it's almost flat. So what is the reason? I mean, is it something like is it because of the problems happening, geopolitical problems, or we couldn't close or couldn't start any project, or any of the projects have moved from Q4 to Q1? So any reason that the growth is flat?
You are comparing last year-on-year quarter, or you are talking about sequential?
No, year-on-year.
So
Q4 of last. Q4 we grew almost 10% last year.
So that was on the back of one account where we cracked the deal and we were able to book the revenue in the last year in the quarter itself. So that has jumped the revenue last year, and that is why you are able to see that flat growth. But otherwise, if you normalize it, it has grown revenue per se.
And additionally, there were a few orders, at least a couple of them, which got postponed from the Middle East because of the war situation.
Right. I just want to understand any impact of this geopolitical issue is causing the company. Even the employee cost has gone up almost 25% compared to last year. Though the revenue is flat, I mean, is it something expected behind?
Yeah. So we continue to invest in our teams because they are the ones who deliver value, and we realize it that the revenue may or may not match the investment in our people, and that's how we look at it.
There's also significant impact because of the new labor code changes that would have added to the employee costs going up.
Okay. All right. And my last question is about where are we seeing a demand now? Is it more from India, Middle East, or in Southeast Asia? I mean, where are we seeing a demand now where we will be getting more work?
Well, India remains our foothold and our strong, I would say, growth center. But we are focusing also on other countries as well, and to cultivate that markets. We have recently opened our subsidiary in Vietnam. So we are looking forward to explore those areas from the growth perspective.
I see. All right. Thank you very much and all the best.
Thank you.
Thank you, sir. The next question comes from Sailesh Rathi, an individual investor. Please go ahead. So please go ahead with your question, sir. So there is no response, sir. That would be the last question for the day. Now I hand over the floor to Ms. Swati for closing comments.
Thank you, Madhuri. Now we would like to thank all the investors for joining us today. Now I pass it over to Vishnu sir for his closing comment. Over to you, sir.
I'd like to take this opportunity to thank you for your continued interest in Nucleus Software, and would like to reiterate our commitment to deliver long-term value to all our stakeholders. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doostabas conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.